And some of you in recent days, weeks rather, may have noticed more pounds in your pocket. Maybe not. That's as the Tories' budget tax cuts kick in. But will we really be better off with a Labour government? That's the question. Joining us now is Greg Marsh, cost of living commentator and founder of CEO of Nous. Good morning to you. Are people really feeling better off in recent weeks and months? We've had tax cuts and national insurance cuts, but, I mean, does that translate to feeling more abundant?
Yeah, it's a little bit of a balanced picture, and it does depend on how much you earn. Middle income earners, so folks between about 23 and 50 or so thousand pounds a year of income, will, from the 6th of April, benefit from this 2p in the pound cut to national insurance tax rates. The effect of that for someone on that kind of salary range is likely to be equivalent to about £500 more a year. That's good news. What you have to offset against that, and the reason it isn't more, is because a lot of the costs of other things, of course, continue to rise. Inflation now at 3.2%, so down from those really high numbers we were experiencing this time last year. But still, even though inflation's falling, prices haven't, which means that not only is the cost of everything higher than it was last year and the year before, but the cumulative effect of those price rises is that many people feel poorer. We all feel like we have less money at the end of the month, even if some of us, those in that fortunate sort of middle income bracket, have a bit more in their pocket at the end of each month. So it's a mixed picture. And unfortunately, until some more of the benefits of falling inflation and a perkier economy filter through into people's wallets, it's hard to believe that it's going to be showing up at the ballot box.
Inflation, as you say, now 3.2%. It was 3.4%. Do you think it's going to take longer to get down to that 1% figure?
In the UK, in the US for that matter as well, there is a sense that inflation's proving very sticky, more so than economists had predicted, more so than the Bank of England had predicted and, of course, hoped for. Until inflation starts falling, and I mean falling back to its target, which, of course, is 2%, a long way from more than 3%, until it falls back to that 2% target, it's unlikely the Bank of England will feel confident enough to start lowering interest rates. Interest rates, remember, what really matters if you're in debt, if you've got credit card bills, or for that matter, a mortgage. People who put a fixed rate mortgage deal in place 2 years ago, and roughly 1 million households in the UK who'll be refinancing that mortgage over the next 12 months, are expecting to see their costs for servicing their mortgage rise very sharply because of those higher interest rates. So the critical question is not just what is inflation, but does the Bank of England believe that inflation is going to fall fast enough and far enough to give them confidence to drop interest rates? Now, unless that happens, the cost of everything continues to rise and none of us feel rich. And so that's the challenge, again, not just in the ballot box, but also for all of us at the end of each month when we're trying to make ends meet.
Greg, I mean, has the Bank of England and also the Federal Reserve in the US, have they got any credibility left? Because when they were printing untold amounts of money out of thin air during COVID, I mean, the US, for example, printed a third of their entire USD money supply in just 12 months. And they were saying it's not going to cause inflation. Then it was, inflation's just transitionary. And now they're accepting that, inflation's out of control. So how can we take the Bank of England and the Fed seriously? They don't seem to know what they're doing.
Forecasting is always very difficult, especially in respect of the future. But having said that, the Bank of England's forecasts haven't always been great. In fact, one of the sharpest criticisms of the central bank by observers has been that they have been consistently a bit too optimistic. They were too optimistic about how much inflation would rise, and they've been too optimistic so far about how quickly it will fall. And that means it's one of the reasons why the markets now are only predicting 2 interest rates cuts, each of only 1/4 of a point, by the end of this year, again, from 5.25% to 4.75%. That is still much higher than that period of low interest rates that, as you allude to, we've got used to. We got used to this idea that prices didn't rise very much, that the cost of money, the cost of borrowing was cheap. And of course, the consequence of that was for many, many years, for more than 2 decades, things like asset prices, house prices increased regularly because it was relatively easy to raise debt. Whether or not that epoch ever really returns, it's much too early to tell. And if it doesn't return, if we remain in this kind of medium inflation environment where interest rates have to remain elevated to try to discourage people from spending too much, that is a problem. It's a problem because it is going to affect us on our house prices, it's going to affect us in the high street, and it's going to affect consumer confidence. And that's the latter issue which Rishi Sunak and Jeremy Hunt are most concerned about in the approaching election, as of course are the US politicians, because Biden has a similar challenge if indeed interest rates and inflation doesn't fall in the US as fast as they hope.